This week, the U.S. stock market seems to be in a wait-and-see mode after a super busy week. Today, we're going to dive into what's causing investors to hold back, from key economic data releases to hot topics in the AI world. We'll cover the special deal between Nvidia, AMD, and the U.S. government, as well as analyst views on tech stocks like TSMC, Oracle, and Supermicro Computer. We'll also summarize the earnings for gig economy companies like Uber and Airbnb and analyze how Trump 2.0 policies might create winners and losers in the retail sector over the next 2 years. I promise the content will be solid, complete, and easy to understand. Let's get started. JoyUp Invest Podcast. Invest better every day. Hello, dear listeners, and welcome to Wall Street Wake Up, the show that wraps up and updates you on what's been happening in the U.S. stock market and markets around the world over the past 24 hours. I'm Joy, an independent investor who's decent at reporting the news, and I'll be your host, bringing you easy-to-digest market updates, stress-free insights, and, of course, my very own Joy-style take on the world of investing. All right, without further ado, let's dive straight into our first story of the day. Let's start with a market overview. After a very exciting week on Wall Street, where the U.S. stock market got a big boost from the hope that the Fed, or the U.S. central bank, might cut interest rates soon, everyone seems to be hitting the pause button. They're all waiting for crucial economic data to be released this week. The first data point we need to watch is the CPI, or Consumer Price Index, which will be announced on Tuesday. To put it simply, this number tells us how much the prices of everyday goods have gone up or down. The other is the PPI, or Producer Price Index, which will follow on Thursday, and it tells us if companies' production costs are increasing or decreasing. Why are these numbers so important? Because they act as a signal to the Fed about where inflation is headed. If the numbers are higher than expected, the Fed might not cut rates. But if they are lower, a rate cut becomes more likely, which would affect the stock market as we've seen before. And now, there's another interesting issue. President Donald Trump has been calling for the Fed to cut interest rates multiple times and has even nominated his own economic advisor to be a new Fed governor. If this person is confirmed, the market could become volatile due to potential changes in future interest rate policy. Now that we've talked about government policy, let's move on to the hot topic of tech stocks like Nvidia and AMD. There's news that both companies have agreed to give a 15% share of their revenue from chip sales in China to the U.S. government. This deal came about because the U.S. government is allowing the two companies to sell some of their chips in China again after they were previously banned. However, there's a catch. They're forbidden from selling their most advanced AI chips, especially Nvidia's H2O and AMD's MI308, which are very popular in China and used by major companies like Baidu, Alibaba, and Tencent. It almost sounds like the U.S. government is becoming a backdoor major shareholder, getting a 15% cut just like that. Nvidia's CEO, Jensen Huang, even criticized this, saying it would cause the company to lose a major market like China. But, on the other hand, getting to sell anything at all is still better than not selling, right? So, in the short to medium term, being able to sell chips in China again should be good for the company's revenue. But in the long term, we have to keep an eye on how the relationship between the US and China will affect their business. Let's move on to other interesting issues in the world of AI. Besides the big names like Nvidia and AMD, there are other stocks that analysts have some fascinating opinions on. Starting with TSMC, or Taiwan Semiconductor Manufacturing, the world's #1 chipmaker. Goldman Sachs says the price of its ADRs, which are shares traded in the US, is likely to recover in the short term. This is because the price gap with the shares listed in Taiwan has widened to a whopping 20%, and this kind of gap usually closes pretty quickly. As for Oracle, Bank of America just significantly raised its price target by almost 18%. They see Oracle as a key beneficiary of the massive increase in demand for AI infrastructure from giant tech companies. On the flip side, Supermicrocomputer, SMCI, an AI server manufacturer, was hit hard after announcing lower-than-expected earnings due to capital constraints and delayed customer orders. This has led to mixed views from analysts. Some still see a good future for the company in the long term, while others are worried about growing competition and potential pressure on profit margins from rivals like Dell. Now let's look at another interesting business group, the gig economy. This refers to platforms that act as middlemen for temporary or freelance work. Last week, we saw a lot of earnings reports from major players in this group, including Uber, UBER, Lyft, LYFT, DoorDash, DASH, and Airbnb, ABNB. According to analysts at Morgan Stanley, a few key points stood out. First, platform and scale matter. Uber seems to be taking market share from Lyft because Uber also has its food delivery business, Uber Eats, which has become a core consumer behavior. This makes its business stronger and more able to grow consistently. However, the rise of self-driving cars is another factor to watch in the long term, as it could impact both Uber and Lyft. As for Airbnb, even though its earnings were good, the growth trend for the number of bookings wasn't as strong as expected, so analysts weren't very excited. Based on these trends, Morgan Stanley analysts still have an optimistic, overweight view on Uber and DoorDash, while maintaining a neutral to negative, underweight view on Airbnb. Finally, let's talk about the retail sector. Analysts say that the main debate for retailers until 2026 will be about Trump 2.0 policies, including import tariffs and economic stimulus measures. These are expected to have a huge impact on consumers and businesses. Evercore ISI points out that these policies will clearly create winners and losers. The winners will be retailers that sell essential goods, like auto parts stores and home improvement stores. Even if prices go up, consumers still need to buy these things, so these retailers have good pricing power. The losers will be stores that sell luxury items like clothing, electronics, or furniture. When prices rise, consumers will hesitate to buy and may wait for discounts during holidays. So, the retailers that will benefit the most from these policies are the big ones with strong bargaining power, like Walmart, Amazon, and Costco, because they can handle inflationary cost pressures better. To wrap things up, we need to keep a close eye on the U.S. inflation numbers this week, as they're a key factor that will determine the market's short-term direction. In the long run, AI and technology stocks are still an exciting trend, but it's important to figure out who the winners and losers are in this space. Plus, changes in economic policy will continue to affect various sectors, as we've discussed. And that's just my personal take, not investment advice, okay? Always do your homework, double-check your info, and remember, every investment comes with some risk. Before we say goodbye today, don't forget to like, share, and tap that notification bell on JoyUp Invest so you'll never miss our daily dose of juicy market stories from around the world. So what about you? Which stocks are you holding right now? Drop it in the comments. I'd love to hear from you. Catch you in the next episode. Bye!